morning and welcome. Patriot Radio News Hour. Joe and Jason on a Friday. What a week here. We had Jay Powell yesterday. We had Joe Biden yesterday. We've got gold and silver rallying hard again. All-time highs in gold around the corner here. Silver, doing what silver does. Another big gain. Maybe the silver shorts have given up here. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Jason, Jay Powell yesterday, same story. Looks like, by all means, there will be no rate hike here in a couple of weeks. Very data dependent. And, inflation's way too high. Out at allamericangold.com today, Muhammad El-Arian, we got an interview with him. You need to listen to it. I'll just give you the highlights of it. Number one, he rips the central bank with this data-dependent thing that they've been stuck on. Talked about how they missed inflation, right? Remember when they kept saying transitory? They missed inflation completely, and then talked about how the central bank, where's the plan? Where are they as far as what's going to come next? All they're saying is we got to watch the data. We got to watch. Jason, they've been watching the data for years now, and guess what? They still don't have it right. But then he talks something very cryptically. In 2 years, we can't fix it right now. This is what he said. Can't fix it. Bad time's coming. But the good news is in a couple of years, I think we're going to be able to fix it. And Jason, I think Muhammad El-Arian is letting everybody know, hey, in a couple of years, don't worry. It's going to be so bad. We're going to get unity in government, and everybody get ready for a digital currency.
Yeah, it could feel, if you're you're in the class of people that as a decision maker, government or whoever buys government, you could you could think that things will be rather working well when you have digital currency, which you can put funds into people's accounts. You could take funds out of people's accounts. You could freeze their accounts. I've seen videos in China over the last 2 years when certain conditions are happening, especially right now with the property markets, and things get scary over there and people start freaking out, and then suddenly they get a little red indicator on their phone and their accounts are frozen. And then they go to line, Joe, to see if they can get their account opened back up, and some of these lines took 2 days. Can you imagine standing in a line for 2 days, Joe? Right, waiting that long just so and what happens is, and this is China, so it's not going to happen here the same way. They ask a bunch of they tell you ask you a bunch of personal questions, which you must answer before they turn you on. So I guess if you're the decision maker, this is a great place to be, Joe. That would be that is a fix, right? Because you can control all the dollars. Cash it isn't floating around being your enemy anymore.
And again, I'm going to echo Muhammad El-Arian. Not that I like the guy, but he's nailing it at least right now. Said the Fed didn't have a strategic bone in its body. Where's the strategy? What is this nonsense of being data dependent? Kind of essentially saying, well, we're not gonna be proactive, right? We're just gonna be reactive, and of course by being reactive, you're always way too late. And this is really a big problem here. News breaking everywhere now about how China has been dumping treasuries at an alarming pace. August alone, $21 billion, and that's just in a single month. That would be, if they annualize that, that'd be over $250 billion. That would be more than 25% of all the U.S. debt that they hold. And then last night, the president, I don't know, maybe it's me, maybe I just don't like the guy, don't have a lot of respect for the guy. I thought Joe Biden's speech was pathetic. You know what I didn't hear? You know what I didn't hear in it? Because it wasn't very long, 10, 15 minutes. Where was the message to Iran? Where was the message to Qatar? Hey, you guys better not get involved. That message wasn't delivered at all. Matter of fact, I think it wasn't delivered on purpose. I've been thinking about this a little bit, Jason. Maybe because I said from the very beginning, why are we in Ukraine? It makes no sense. Right? Ukraine, they're corrupt as corrupt can be. Right? They're not important. Leave it alone. Now I'm thinking, maybe that was the plan. Are we going to make a play here to go to Iran? Is that what is in the cards here? And hey, the best way to do that, first let's get Russia occupied, right? Let's exhaust them. I don't know. It's just something that's been kind of floating around in my head here over the last little bit. And I just, yesterday I expected a big threat to Iran that they better not get involved in all of these other things. Jason, I just don't know what to think here. By the way, I apologize to our YouTubers and our who's the other one? Gosh, I'm drawing a blank. Rumble. I forgot to hit the record button, so we're recording it a little late here. So normally I don't set it up, but I had to set it up today. I screwed it up. But yeah, maybe, you know what? 105 billion more in aid. I'll break that down. But do we want war in the Middle East? It made me feel that way. Jason says no, but I don't know. We'll be back after the break. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Friday. A quick look in at the markets. The Dow's down 150. The S&P's down 40. The Nasdaq's down 170. The 10-year note briefly crossed 5%. That's a pretty psychological number. We're within a couple of basis points of seeing a 10-year note at the highest levels of this millennial. I think it's like 523, I think, is the high level there. It's sold all, some profit taking and what have you on the 10-year note right now. Is back down to 490. It won't stay there very long. Crude oil's up $1 to $90 and change. Gold crushing it here, up $27, $19.95. By the way, August 2024 is already at new all-time highs in gold, almost at $2,100. Silver up 80 cents, now banging on the door to $24. If you're starting to question the Fed and the fact that Mohammed El-Arian says, hey, where's the strategic plan? What's going on here? I know we can fix it in a few years with a digital currency, maybe. Of course, he didn't say digital currency. I said it for you. But maybe you want to try to diversify yourself even more besides gold and silver in something that isn't correlated to Wall Street. Check out our friend. We've been talking about why refi for a year now. This is a great way to get great rates of return, up to 10.25%. It's not correlated to Wall Street. Doesn't care about the stock market. Doesn't care about Jay Powell. Right? It doesn't matter. They don't care about that stuff. And it's fixed. What does fixed mean? It means it doesn't change. Well, what if the Dow falls 5,000 points? It doesn't change. What if the 10-year note goes to 8%? It doesn't change. Right? What if it goes to 0? Right? It doesn't change. There's no fees. If you need your money back, you'll get your entire principal back. Nobody does that kind of stuff. And it's actually for the greater good, too. That's what I love, too. Check them out. InvestYRefi.com. That's the word invest. The letter Y, REFY.com. Or just call them Why refi 24? Now, I was saying before the commercial break, hey, I don't know, did we go into Ukraine to exhaust Russia so we could make a play in Iran in the Middle East? I don't know. I'm just speculating. Last night Joe Biden gave his speech. As we talked about the other day, Jim Jordan is going to step aside, at least temporarily. We're going to get a temporary Speaker of the House, Patrick McHenry. And all of this is to get the checkbook open. The first check we're going to write looks like $105 billion. $60 billion of it's for Ukraine, $14 billion for Israel, $10 billion in what they're calling humanitarian aid, $7 billion for Taiwan, and $14 billion for the border. So, Jason, they made sure they get everybody's vote on this one, didn't they? We're going to throw in border funding for some of these Republicans. We got the humanitarian aid for all the liberals over there. Oh, and we also got some Taiwan money, not to mention Israel. But really, it's just a way for us to spend another $105 billion. I don't know where this money's coming from, but, Janet Yellen said we can afford 2 wars, so why not?
Yeah, that's it's. I think when we hit the November date for the government shutdown again, I don't know what they're going to do. Don't they? It's going to be chaos, isn't it? I don't see that they're going to have a Speaker of the House then, Joe. They're locked up.
Well, no,
I mean.
They're going to have McHenry there till January. Yeah, they'll have him in there to January. I think in November when they come up, I think they're going to do the same thing, which is, okay, let's just keep the spending the same until January. Yeah. We'll deal with it then. Who knows? And it doesn't really matter. Listen, DR, they're all the same. They're going to spend their money, and we're spending trillions and trillions of dollars. There was a story. This is out of, I want to give credit here, Gold Fix, about what's going on with gold. Yes, obviously, we've got gold rallying on multiple fronts. Right, number one, it looks like the Fed has lost its nerve in its fight against inflation. Jay Powell did his best yesterday to be tough, but essentially said we're not hiking rates. But then he said, inflation's way too high. Wait a minute. If inflation's way too high, you hike rates. No. Can't because the banks will all go under. I can't hike rates. So gold's rallying on that. Gold's rallying on the fact that, man, we've had bad debt auctions. It's getting overwhelming. Just all there is to it. Right? They're just being overwhelmed by the amount of issuance coming out of the government. Now we're going to throw another $105 billion on it. Obviously, the war, right? What's going on with Israel in the Middle East. Heaven forbid Iran, Qatar, right, get involved here. I mean, you can see oil prices doing things nobody wants to see. But there's another story. According to Reuters. Now, I have not been able to confirm this. Now, obviously, Reuters are very respected, and they have sources within the Chinese government implying that China may issue gold bonds in the very near future as a direct attack to the U.S. Treasury dominance. I don't know that. Obviously, China's been buying a lot of gold again. Everybody and their mother says, don't believe their official gold holdings. They've got way more than that. I don't know. I do know that Egypt, right here we are, right? We give a lot of aid. Think about all the governments that told Biden, don't come. Jordan, don't come. We give Jordan like over $1 billion a year. Abbas in Palestine, Egypt, right? Qatar. We give all these countries money. And they say, don't come. And then we find out Egypt, for the very first time, they need money. They're selling bonds. They almost always, without exception, sell U.S. dollars. First time ever. Guess what they did, Jason? You shouldn't be surprised, right? In Chinese renminbi. They're starting to issue Chinese renminbi bonds. And this is how these things start. Again, I don't have confirmation of this, but Reuters has implied that China may start to issue gold-backed bonds as a direct shot at the U.S. and their treasury dominance.
When do they propose this might happen? When's the prediction for this?
This is where it gets fuzzy, right? So the gold fix guys were saying January. I don't know. I think that's something where it's a possibility. You can't rule it out. There's a reason why all of these central banks are buying gold. By the way, the gold buying in September, off the charts again. And it's not just China. So many countries buying gold. It just seems to me that somewhere there's a plan somewhere that these countries are all buying gold.
Right. So, yeah, it sounds like you start with the threat of doing it, and then as time goes on, you see how real it can turn. So, it's, let's face it, it's the one asset that you can kind of hide how much you have, right? It's like the U.S. Treasuries are issued. It's a paper asset. And, there's kind of a record of where that stuff is. So, it is definitely, gold is definitely being used as a hey, how much do I have? How much do I not have sort of situation? And you're describing these countries that we give money to that, Biden was told to stay away from. It's, kind of a reflection of how unimportant dollars are becoming to these countries, Joe. It's like, well, we don't really need you to come to Jordan. We really don't like you anyways. And now we have the ability to maybe just tell you to go away, whereas we were dependent upon your dollars before and we really couldn't. So that's kind of scary, huh, Joe? It's happening.
800-951-0592. Gold's up 30 here. 1998. Silver's up 85 cents here, closing in on $24. I got something that's going to last 5 minutes. I've got 20, I wish I had more, I got 20 $10 Liberties at $1,095. I've been told by all the suppliers out there, get ready, $10 Liberties are going to get more expensive like they've traditionally been. This is the last 20. If you want them, you better call and you better do it now. 10th ounce gold Eagles. Yesterday, they were $245, 50 or more, $240. That's gone. That's gone. I mean, gold's up almost, $200 in less than 10 days. 10th ounce gold Eagles, if you want some barterable material, $250, 1 through 49. If you buy 50 or more, $245. And then these silver half dollars, listen, I'm going to tell you right now, buy all the silver you can while you still can, while it's relatively inexpensive, $230. So yesterday they were $225. It's almost up $1 an ounce. It's actually a little bit better of a buy today because there's over 7 ounces of silver in that roll. $230 for a roll of 20 silver half dollars. 800-951-0592. If you want to buy all of those $10, let's see if I can get my calculator to work here. The $10 Liberties, $21,900 if you want to buy all of them. If you've got that, if you're looking at jumping in, that's what I would jump into first. 800-951-0592. The other thing that Jay Powell said yesterday. Now, I've told you for 3 years this is what's going to be. Jay Powell finally admitted it. just not the way I said it. He now admits to conquer high inflation, stubbornly high, he called it, we're actually going to need slower economic growth. That's a very polite way of saying we screwed up, we were too late, and now we need recession to get inflation under control. And Jason, the unfortunate part, it's going to have to be a bad one to get it under control. This is not, this little garden variety. Oh, well, we met the technical requirements for a recession and now it's all over. That's not going to work.
Yeah, it's not going to work. It's not going to work, Joe. And, I'm watching this. I mean, I'm going to go to this with the customers, Joe. There's different ways of finding the gold spot price. And you talk about this once in a while to keep it, but I'm looking at two different spots. It looks like we're going to have gold at 2,000 spot everywhere possibly today if it keeps doing this. One place I'm looking at, Kitco has 1995, but when I'm looking at Market Watch, it's already 2005. So I just want to say this. I've been saying, when gold goes, it's going to go really fast. It's a leading indicator usually of more inflation. So I'm wondering if this is the start of it, Joe, not the end of this run on gold right now.
Yeah, I was just going to say the same thing. TD Gold 2006, 800-95. 800-951-0592. Got 3 lines open. 5 of the 10 libs are already gone. They're not going to go get them right now. I know you love listening to the show, but this is it. And then a big jump in price coming. They're 1,095. The 10th ounce American Gold Eagles, what a great buy. Still, 250, 1 through 49, 50 or more, 245. And then that utility silver, the silver $half, I guess the premier coin, if you will, in the utility / junk silver market at $230 a roll at 800-951-0592. Geico today laying off 6% of its staff. Insurance companies, we've warned you about that too. We told you this was coming. Insurance premiums for any insurance, I don't care what it is, car insurance, health insurance, life insurance, homeowners insurance, whatever type of insurance you're talking about, prices through the roof. Geico today announcing they're laying off 6% of its staff, Jason, to try to keep, premiums in line. And let's face it, more and more people are saying, I can't afford it, right? And not paying for the insurance. How about trucking? Remember Yellow Freight? They went bust earlier this year. Well, trucking company Convoy has made it official. Not only are they going bankrupt, Jason, they're doing just what Yellow did. They're going right out of business, saying that they're going to cease operations. It's this slow grind, right, where we're starting to see it. Even the airlines, now United the other day, American Airlines actually posted a loss in its earnings the other day. Jason, all the clouds are gathering, but hey, the government's just going to spend, hundreds of billions of dollars over and over and over again. We're going to have one of these really weird economies where certain industries are going to get hammered, other industries are going to be doing okay. And the fact of the matter is, as Jay Powell put it, hey, the only way we're getting rid of inflation, we need a much slower economy.
Yeah, I get the feeling that a lot of the old timers of some of these companies are deciding to either get their retirement done now or just retire early and grab the benefits and cash out. Don't you get the feeling a lot of that's going on too, Joe? Some middle management or upper management, some CEOs maybe. I remember right before COVID, a record amount of CEOs cashed out and took off. You remember that? So I get the feeling some of these job losses are also going to be people cashing out, Joe. Because I'll tell you right now, if I was if I had the pension or if I had the retirement plan, and I was due to retire in 2024, 2025, I would be discussing getting out now, because whatever these assets are, they're not going to be worth as much, I don't think, in 2024 and 2025. You're going to lose a lot of retirement purchasing power if you don't get this stuff and get out of it, Joe, because I'm just glad I'm not in that position, right, Joe? Aren't you glad you're not 60 years old or 65 years old, getting ready to retire right now? It's like, oh, 2 more years. I just need 2 more years. You know, how much could 2 more years cost you in this situation, Joe, right? That's a scary place to be if you're in that age range.
Well, and think about this. It's just really, really difficult to see. This is a very tough problem. You know, we talked about housing yesterday as an example. It makes no sense. It's not how economics is supposed to work. You've got almost no demand. I mean, it's incredible how bad demand is. But prices haven't fallen. That doesn't make sense. But that's how broken things are. How about this? 3,700, I didn't even know there was that in Detroit. The casino workers in Detroit, 3,700 people walked off their job today, Jason, right? Why? Well, we need more money, right? Hey, if you want us to deal the cards, right, and get people the drinks, you're going to need more money. And then credit card delinquencies. You know, we talked about commercial real estate earlier this week. In PIMCO, returning the keys on 20 different hotel properties. Credit card delinquencies, the worst performer in the last quarter, as millions and millions of Americans continue to struggle to be able to make those payments. And they're saying, I don't know how this works, that the average credit card interest rate now is north of 20%. I mean, how is that a good deal, right? You know, it's so funny. Remember when they made that big deal about payday lenders and how they were gouging people and they shouldn't be in business, and yet these credit card companies, listen, even with good credit, you're at 20%. The guys with bad credit, Jason, they're above 30%. I guess it's okay if the bank's doing the gouging.
Average, I think I saw average credit card is 22%. So good or bad credit, the average is 22. I see for people with bad credit, they're offering over 30%. I mean, the loan sharks are having competition at that level, Joe. I mean, come on. I mean, a loan shark charging you 40% or 50% is not too far away from what credit cards are offering somebody that really needs it. So bad time to be getting into debt, Joe. I'll tell you right now, I know a lot of people are depending on credit to pay the bills, but if you're depending on credit to pay the bills, you're in a really bad spot. You need to get out from being upside down in that situation. And if you're not upside down in that situation, you got a little bit extra. We got something you can put the little extra in. We got the metals program. You can just, without thinking about it, make it one of your bills you pay every month. You join the metals program. Every month you put a little bit of money in there, and every quarter we call you up and you can pick it up after we make our buy for all of our customers. It's just, you know, there's lots of ways, Joe, to do gold and silver. We got lots of options for you. I know we have gold IRAs, which we don't talk about a lot. People that want to move, we're talking about those retirees. Hey, move it, bring it to us. You know, I think Arlene is the main one, right, Joe, that over there likes to handle the gold IRAs and move some of that retirement stuff into the right place right now, right, Joe? Wouldn't this be a good time to take some of those retirement assets and get it out and put it into a gold IRA?
Yeah, and again, very low fees. It doesn't cost a lot, you know, I think to set up your account and pay a year's worth of storage, it's less than $500. And then all as you pay every year is a storage fee, which is usually like $100. Not 1%, right? Not 2% of your investment. And again, how that works, we are simply the company that provides the metal. We go through a company called Gold Star Trust. We only use it because their fees are low. They're the fiduciary. They're the administrator, if you will, of those accounts. But we do supply the metals. You can now store it in Texas or Delaware. We got a couple of different places where the metals could be stored. Patriot Radio News Hour, 800-951-0592. We'll be back after the break. 800-951-0592. Gold's up 27 here, 1996. TV gold, 2008. What's the difference? That's just the December contract was what they're showing. The TV will show the most actively traded contract. So obviously it's the 20th of October. So this October contract, it's getting ready to expire here. So there's not nearly as much volume in that. So the TV gold, that's why, hey, when you're looking at your TV and it says $2,000, 2007 and 70 cents, and I'm saying it's 1996, that's the difference there. Silver, up 80 cents here, 23.83. I still have, now there's the phone lines, someone just jumped in. I still have the $15, $10 liberties. If you're looking like, hey, I just want some protection here, that's the best thing to buy today. I only got 15, and then after that, go buy the 20s. By the way, 20s today, just to give you an idea, 2,240 on $20 gold pieces today. But I have 15 remaining on the $10 liberties at $1,095. You know what? The girls are telling me during the break, most of the buying has been in that barterable material. The 10th ounce gold eagles, $250, buy 50 or more, $245, and then those silver half dollars at $230 at 800-951-0592. I think that makes a lot of sense. I understand why people are doing that, but either way, we can help get you protected for what's coming. And again, I'm still trying to confirm. I haven't been checking my sources, but Reuters has implied that China may start issuing gold-backed bonds, as a way. Now think about it, why would they do that? Today I told you about how how Egypt issued bonds in renminbi, right, to raise money. Normally that's always been dollars. And China, they made headway in a few places. But to get broader acceptance, Jason, would you think maybe China's like, wait a minute, I want and let's pick a country. Maybe I want Italy, Italy's already warning they got some problems. Or I want France, or maybe Mexico, Canada, South Korea, maybe, to hey, instead of issuing bonds and dollars to raise money, we're going to do it in Chinese renminbi. And maybe the way, Jason, for them to be able to do it, maybe they need to offer that incentive and say, hey, this thing's going to be backed by gold to get more clout. Because right now, when you look at this market, outside of cross-border, which the renminbi now is the number one trade in cross-border payments with China, to get a bigger foothold on the world stage, it definitely would probably attract a lot of people that would say, okay, you know what, if you're going to back it by gold, we'll do it in renminbi instead of dollars.
It definitely adds a layer of attractiveness that some countries like the idea of using the yuan because they're the world's largest producer of things, right? So there's you kind of got that back in the Chinese yuan, but if they're going to add their gold holdings as a backing of their using their money, then yeah, that's an extremely high attractiveness for a lot of countries, but. They almost have to do that, don't they, Joe? If they really if the Chinese want people to be attracted to their money, they have to do something because their economic troubles don't look much better than ours, do they? If things go wrong in China, there's inflation. If things go wrong here, there's more inflation, right?
I would say that this would be my guess. In order to get, Canada, Mexico, and maybe not. Maybe Mexico is a little more willing. But, Australia, some countries like that to do it. There probably has to be an incentive because they're like, we'll just do dollars. It's just easier. And you got to remember, for a lot of these nations, they probably would be open to it because they're like, well, we buy a ton of stuff from you anyways. Right? So with that incentive, because right now, China's trying to get to, 3 or 4% of that market. That's not enough to make it. Remember what I said over the weekend about the IMF? That meeting in Morocco. Janet Yellen tried to get the IMF more money. Right? Why? Because, she sees there's going to be trouble ahead and we need more money in there. China stopped it cold and said, if that's the case, we want a bigger say in how this is divided up, because obviously the dollar in the drawing rights is the biggest player in that basket. And then all of a sudden the meeting ended. Right? Okay, meeting over. We're not talking about it. And essentially, I think for China, if they really want that, the only way for them to get it is they've got to get nations, a lot more nations, to buy to issue debt in renminbis, and that would certainly be a way to make that happen, wouldn't it? And it would also kind of make sense as to why has China been buying all this gold to begin with.
That makes a lot of sense. Yeah, all that makes sense for sure, Joe. And so we'll have to watch and see if it materializes into something real, because if it materializes, it's going to change things, that's for sure. But we talked briefly before the show about oil. Maybe on the last segment. I think oil is. There's a lot of countries positioning themselves in certain positions to be benefiting what's going to happen to oil. That's where this Israel war becomes such a major situation, Joe.
800-951-0592. Put gold away. You're going to be rewarded if you do it. Those $10 liberties, that's the buy of the day for sure. Jason and I will wrap it up here right after the break. Well, I think this is a little different here from what we've seen. I think that real quick sell-off that we had a few weeks ago, I think that was kind of the let's just triple test that bottom here, 1800. We've seen this huge skyrocketing back. But here's the other thing that we haven't talked about. I think, and their story starting to break now, sources within inside the Fed, they're done hiking rates. They're I don't know. And again, this is something. It was out on Zero Hedge, Bloomberg Live, talking about, is the Fed done? That inside of the Fed, they're praying that somehow inflation will start going down, but it looks like they're now saying that the December meeting's is a non-starter here. There's a lot of problems. Here's the problem. There's a lot of problems underneath the surface. Some of it helps the Fed. One of the problems is the amount of issuance of debt from the government. So right now, think about this. We're sitting here with war. Okay, and everybody's waiting for the ground invasion. Is Iran going to get involved? Are they going to Lebanon? Are they going to Syria? We should have everybody and their mother running to the Treasury market, because that's what would normally happen. When Russia invaded Ukraine, the Treasury yields, they went skyrocketing down. Everybody was buying Treasuries. We had a 10-year note in the 4.9s. Heck, last night it hit 5. They're not running to the Treasury market. You know what? They're running to gold. And I think that the overwhelming amount of debt is helping the Fed in not having to. They're probably sitting there going, well, gosh, why do we have to raise rates? Look, 10 years are already at 5, right? And it looks like it's going higher. we can sit here and not raise rates but continue to have yields go higher, because that's what they do when they raise rates. They're trying to get yields to go higher anyway. Jason, it's happening for them already. I think this is a huge catalyst. I think the gold market is sensing this, that the Fed, they're not going to admit it yet, but there's going to be an omission here pretty quickly that they're done raising rates, which at that point clears gold to go to all-time highs.
What if oil goes to $250 a barrel? What does that do to inflation and their idea about not raising rates? Because the Goldman Sachs, we'll get to it on Monday.
Yeah. In that scenario, again, I don't think the Fed raises it, because that'll be a war scenario. The Fed will say, well, it's not, yeah, it's 200, but we bombed Iran,
so you just kind of said it. You basically said it. War is their excuse to stop raising rates if the inflation goes crazy. So they're not going to raise the rates because of Israel. There you go. Got to point the finger somewhere, right?
800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.